Hi everyone, Oleg Tkach here with your weekly rate update. And this week, definitely not what everybody expected as rates started going up, and even through Thursday, we saw the market really kind of fall off and rates really ticked up a lot. And a lot of people are wondering, why is the market getting worse when technically it should have been getting better? Well, let's start with the first part that everybody knows about, which is everything that's been happening in banking. Everything that's been happening in banking, all the banks failing and everything else that's been pushing rates down. All of that seems to kind of be behind us, as most people say. All the banking issues that we had in the past, it seems like the banks that were having issues are out. There's really not any new ones that anybody knows about that's on anybody's radar that are having troubles. So that's really kind of behind us now, and that really helped us with interest rates. Now, the second part that really is in focus again right now is inflation. Now, we did receive that report last week, and the report came in a little better than expected, but even though the industry analysts had their target number that they were expecting it to come in at, in general, everybody thought it was going to blow way past its expectations and come in way better, and that was what's going to cause rates to go down significantly. Unfortunately, the report was just a little bit better, not better enough to the point where everybody thought it was going to be. Now, with that said, what does that mean? Well, the Fed's going to be meeting in June. And a lot of the Fed, the different Fed members have been coming out, some today, some yesterday, and they've been saying things like, we don't have enough data to say that we're going to pause hikes in June. And everybody has essentially priced in that June we're going to be pausing on rate hikes. And so now all of a sudden, Fed members are talking about, well, there's just enough data. Inflation's still a problem. We are probably going to have to raise rates. We might have to raise rates. And even though it doesn't mean anything because it hasn't happened yet, the fact of the matter is now that they're talking about raising rates again, that is really taking the current rate market kind of into a tailspin, and we're seeing rates go up because of that. Right now, they're predicting there's a 30% chance that the Fed will raise rates in June. A couple days ago, it was only a 20% chance. A couple weeks ago, it was like a 5% chance. So as you could see, more data is coming out to support a future rate hike. The last part of everything of what's causing rates to go up and the pressure for them to go higher is the debt ceiling that the government's working on right now. Why is that a problem? Well, treasuries are purchased all around the world, and if you see that a country might default, that means they're not going to be paying out on treasury, which means why would you put your money in treasuries knowing you could potentially not get paid on them? Therefore, until the debt ceiling gets resolved, a lot of money's flowing out of the bond market, and the bond market, specifically the 10-year Treasury bond market, directly is tied to interest rates. Therefore, because of the banking news that's behind us, the rates that are potentially going to go up again, the federal funds rate, and now the debt ceiling, those three things are kind of like this perfect storm of what's happening in the market today that's continuing to push rates up. Long term, year from now, year and a half from now, yes, rates should be lower. However, short term, next 30 days, 90 days, 45 days, what have you, right now it seems like everything is still going towards a higher direction. If the debt ceiling gets resolved, which hopefully it will any moment now or soon, if more reports come out to support inflation getting better, if it happens to be where some other bank starts having issues, all of those three things will help drive rates lower. Now, with that said, higher rates, less people out there making offers, less people making offers, less bidding wars. Bidding wars are a thing right now, as you guys all know, as agents. So right now, really more than anything, an opportunity maybe in the next week or two for buyers not to see as much bidding wars out there. Still, inventory remains a problem, remains low. I think as a buyer, you look at these opportunities, and higher rates might not be the worst thing as we go into the summer months when it comes to negotiating. With that said, there you have it. That is your weekly update. We'll keep you updated as we go. If there's anything we can do for you, let us know. Otherwise, we hope you have a great weekend.